forward, please feel free to jump in. If you want to mute yourself out while we're going through it quickly, and then to be honest with you, it's easier for me to ask questions and answer questions by voice rather than the chat box. So if you have any questions, just call them out to me, and we'll go from there. So I'm going to share my screen and run through this short presentation first, and then we can answer questions afterwards.
John, will you be sharing like what you're using? Because I know when I first got in 2020, it was Hugo's Way, and I forget now what I used. But I haven't done anything because I've just been doing the stuff with the portfolio with Kurt and Mike.
Okay.
So I haven't gotten back in to do anything. And I know Jim has brought up a couple of different things, but if you can share that eventually, that would be great.
Okay. Are you talking about for a demo account or a live account?
Yeah, and whatever you guys are using.
Okay. All right. Well, what this is going to be about in terms of I've titled this 5 months to 5 figures, and the only way that we can get to 5-figure account in 5 months is using a prop firm. And so I'm going to be focused on that. My message
did you call it a prop firm?
Prop firm, yeah. PROP.
What is that?
It's a funded trader challenge where you, for minimal investment, you will get a demo account, which can be any amount, 12,000, 25,000, 50,000, depending on what you want to spend. And it will act like a demo account until you've shown a profit of 10% on that account. And then it will turn into a live account, and your account will have that amount of money in it. So let's say, I'll show that to you in a minute, but let's say... Sorry?
Okay.
So for minimal amount, you can trade in the markets. When you get a 10% gain on that account, you will then have a live account. You won't be able to access, let's say you have a $25,000 account, you won't be able to access the 25,000, but any gains above that 20,000, you can withdraw usually weekly, and you can withdraw 80% of that gain, and 20% of the gain goes back to the company because they are using investor money to give you that 25,000, but you can never access that 25,000.
Okay.
One caveat here is whoever brought you into the company, so in your case it's Jim, always follow what Jim tells you, not me. This is just what I'm doing. It might not be the way Jim wants you to do it.
Okay.
If he wants you to do that, then check with him, make sure he's happy with you do it. Some people don't like using funded trader accounts. I happen to love them. I think it's a very inexpensive way to grow your money. But one caveat I have about that is the ultimate goal is not to stay in the funded trader program, but to use that money to fund a live account, so you have full control over your money. So again, for instance, what happens is if you make $5,000 in your funded trader account, you'll be able to withdraw $4,000 of that, because $1,000, 20%, goes to the prop firm. The idea is that $4,000, a percentage of that, whether it's 25%, 50%, or 100%, you should be putting that into your real account, your real trading account, so you can build that up yourself.
Okay. Great. Thank you.
Okay.
Yep.
So let me just run through this quickly, and then we'll go over the other the other questions, and I'll show you what we do. So one of the big keys with a lot of people here is self-sabotage, and that can be a lot of things. That can be fear of missing out, that can be taking late entries. We all do that. That can be questioning the strategy that you're using in terms of its efficiency, its effectiveness. We look at other people, what they're doing, how they're trading, how they are examining the markets. You see a lot of people marking up charts in TradingView and doing a lot of their own strategies or adding to their own strategies. But one of the things about the mindset and the psychology of trading is you need a certain level of commitment to what you're doing. Okay? To make money in the markets, obviously we want to make profits. And the only way we can make profits is to get educated. Because what we want to do is we want to predict the direction of the markets, not guess which way the markets are going. So we don't want to see a nice bullish run going, think, hey, we're going up, let's get in. That's not the object. We want to look at our strategy. In this case, I'm going to be focusing on impulse. We have a lot of good strategies in the academy, Aurus for gold, impulse, dynamic edge I use. It's a little bit more of an advanced strategy. But whichever one you use, harmonics, there's a lot of good strategies there, but you have to trust that process because they're based on using technical analysis, price action, past prices to more accurately predict the direction of the market. And you'll never be 100% correct. As many of you know, I hit the Masters Club Award pretty much every week. I've done it for 40-something weeks on the trot now. Usually my success rate is quite high. It's about 82% to 90% on average. Many times it's 100%. It has to be a minimum of 70%. As you know, with proper risk-reward management, you only actually have to win 3 out of 10 trades to make money if you're practicing proper risk management training. That's the kind of thing we're going to do on the trading training later on, not on this training, because this is focused on the psychology of trading, not the actual analysis and the indicators that we're going to use on trading. Okay? So basically, if you want to make money, you need to do these 2 things, and if you don't, you won't be successful. Okay? We want to use the science behind this. And it is vitally important that when you look at something like the impulse strategy, that you understand that there's a science behind every aspect of it. When we're new and trading, my recommendation is you need at least 5 indicators to line up before you take a trade, out of about 8 that's available to you on impulse. And again, we'll cover that in a later training, but you have to be confident that those indicators are there to help you predict that market. And you have to be committed to that. You can't second guess it. If impulse is your strategy, if Aurus is your strategy, if harmonics is your strategy, you need to learn those strategies inside and out. You need to be on the go lives. You need to be learning all the time. And you don't have to learn just from go lives. There's lots of great books out there that you can learn from too. And I'll be sharing those in later broadcasts as well. But you need to have this unshakable belief in the efficacy of the strategy that you've chosen to follow. Jim can back me up here. Tony can back me up. A lot of people can back me up here. A lot of the great traders. Many of you know Catherine has been in the Masters Club. She's hit it, I think, 4 weeks running now. She started on in May, actually in June, sorry, June 1. So in just over 2.5 weeks, she's consistently hitting the Masters Club every single week. And she's actually got a better success rate than me. She's normally 90 or 100% success rate every single week. And the reason that she's not at 100%, nearly always without fail, is that she does a late entry. And late entries can be FOMO, F-O-M-O, which is fear of missing out. And that means you see the market taking off, you might have missed the original entry, and so you're getting in because you don't want it to take off without you, but you already missed the perfect entry as indicated by impulse to show you where those 5, 6, 7, 8 indicators were. You try to get in a bit later. Invariably, you might have hit a level, a pivot point, a support, a resistance, whatever you want to call it, and it will retrace, it will pull back, and then you go into drawdown, you start losing. So late entries, we call it leaky, L-E-A-K-Y. Late entries are killing you. And that is probably one of the most common mistakes I see people make, is making late entries. If you can't get in when you're meant to get in, wait for it to set up again. Okay? And the other thing that you see a lot of people doing is they get out their trades too early. They don't let the trade run. And by that, I mean, is you get fearful. And again, we're talking about mindset here, not the practicality of the charts. The charts are going to tell you, impulse is going to tell you where the exit point is. And there's a number of rules about exits, and they could be engulfing candles going against you. They can be candles breaking a line. They can be candles breaking out of the Bollinger Band range. They can be a number of things that we'll go over at a later stage. But you want to stay in the trade while impulse is telling you to stay in the trade. And only when impulse tells you to get out of the trade by a clear signal, clear indicators that that particular run has ended, do you then get out. And that's a very, very typical way that people don't make the maximum amount of money. The most successful traders will limit their losses and maximize their gains. So that means is when you go into drawdown, obviously I'm hoping everyone uses a stop loss and they know where the stop losses go, and they know why the stop loss is there, and whether they're using a trailing stop loss or moving their stop loss as the trade goes more and more into profit. Hopefully first to break even and then into profit. So no matter what happens, you're still going to make a profit. That's on the stop loss side. But if you have a take profit that's too close to that, and you're not looking for a 1-to-2 risk reward ratio or 1-to-3 risk reward ratio or higher, then you're leaving your runners and leaving money on the table. And you don't want to do that. Jim is a great example of running is good trade. So if they are running, you stay with them. You can even add to them. Good traders will add to the winning trades. And a lot of poor traders, they will allow a trade to go into drawdown, and because their analysis has indicated that, let's say you're in a buy, but it starts going against you. If their analysis says, oh no, we're going bullish, we're still going up, they will stay in that trade too long. And again, we'll go into this more when we're doing the trading. You know, I've done it, Tony's done it, we've all done this. This is just what everybody does. but we want to maximize our winners and minimize our losers. And that takes discipline. It takes focus and patience. Patience can be a killer as well. Fear of missing out can be a killer of our trading journey as well. Frustration, revenge trading. A lot of these things can kill our trading, or at least limit the success that we're going to have in trading. So my message for this is to trust the product. Don't overthink this. Don't try and change the strategy. Don't try and add extra strategies to it, especially in the early days. Impulse is the perfect strategy. You can start adding things to it. You can start adding other trend lines. You can start adding other levels. You can start adding other pivot points. You can add things like PSARs. You can add things to it. But this strategy is phenomenally successful because it's got so much integrated into it. Those little arrows that most people find annoying because there's so many, and many people turn off the arrows when they're trading in impulse. And I'm talking about the little blue and red arrows either above or below every candle. There is actually over 50 market variables processed into every single arrow. And there's a very good trading strategy within Impulse where you actually trade those arrows, especially with a little drawback to tell you when to re-enter. And I'll go over those in another date. But 50 market variables, you cannot, even I cannot, I'm sure Jim will agree with me, we're experienced traders, but we're still learning, that we cannot come up with 50 market variables that we can follow accurately. So why bother? Trust the strategy. You need to go on Go Live. You need to follow those Go Lives. If you can't get on live, go to Brandon Boyd and Dr. Josh Lee's favorite sessions and at least do Bootcamp 1, 2, 3, and 4. Bootcamp 1, 2, and 3, they're all about 5 or 10 minutes long. The last one is an hour long, but the first three, Bootcamp 1, 2, and 3, they're literally a few minutes. Just go through those and go through them all the time. When I turn Impulse on, the first window that comes up is the PDF tutorial. And again, I would urge you to go through that tutorial. Just scan through it quickly. There's only about 12, 15 PDFs on there. Just scan them quickly, just to reinforce in your mind what all those indicators are. The more you learn, the more confident you will be. And that goes back to mindset again. The more you're confident, the more you'll commit to the product. The more you commit to the product and the strategy, the less mistakes you'll make, and the less likely you are to self-sabotage yourself or to make mistakes that are going to cost you money. Personally, myself, I don't know about anybody else, but I'm on at least 3 Go Lives every week, and I've been in this academy over 3 years. Every single week, I'm at least on 3 every single week. And if I can't get on them live, I'll watch them on a recording. Every single session is recorded. Okay? Always be learning. That's the secret. Excuse me. Let me stop that screen share for now, and I will take you over to Impulse. Well, everyone knows where Go Live is. It's in your academy. You go to Forex, if that's what you're on, stocks and crypto e-commerce. You go here. I'll just show you this quickly. Here's your educators down here, Brandon Boyd, Josh Lee, right here. Here's all their Go Lives. If you can't get on those times available, go to your favorite sessions. Here's Bootcamp right at the top, Bootcamp 1, 2, 3, and 4.
Hey, John.
Yeah.
Share that with us. We're not seeing the Go Live right now.
No, okay, sorry. I turned that off and it went, it turned everything off. So when you go into IM Academy, you will go to go live. You will hit on foreign exchange here. If you're on foreign exchange, stocks and crypto, e-commerce, whichever one you're on, but foreign exchange, you'll hit that. Can you see it now, Jim?
Yes.
Okay. And here's all your educators here. You simply scroll down until you see Josh Lee and Brandon Boyd right here. They're all their live times here. When you click on it, you'll go to their session. If it's live, they'll come up here. But go to the favorite sessions here. And here's Bootcamp 1, it's 9 minutes. Bootcamp 2, 10 minutes. Bootcamp 3, 3 minutes. Bootcamp 4 is the long one, it's 1 hour. Okay, that's the detailed one. These are going to be very quick. Bootcamp 1, 2, 3. So this is not going to take a lot of time, and this will be your foundation that you need for starting your journey. Let me just go to this is the one I'm talking about. This comes up. If you don't check this box, this little PDF comes up and you can scroll through this very quickly. Doesn't take long. And here's your 50 market variables in each arrow to give you an idea. Just go through this. It's very quick and it will show you exactly what you need. And I would do this on a regular basis. And once you're in Go Live, and I'm going to be going over this in more detail later on this afternoon when I do the later training. The markets will be open, so we can look at the markets as they happen, and I can show you where you need to get 5 indicators. So as you get more experience, you can actually take trades with 4 indicators, but the more indicators that you've got that are in confluence with what you're trying to do, the better. There's actually 8 major indicators in there that I'll show you later. Obviously, if you get all 8, that's a very strong trade. And that's where patience comes into it. And again, we're all, sometimes when we're sitting in the chart, especially people who go to work, they've got an hour on the charts and nothing's setting up for 20 minutes, 30 minutes, 40 minutes. We might be keen to take a trade, even though it's not showing us all the full indicators, but that's not what we should be doing. Trust the process, trust the product. Okay? We want to get everybody on the process of being committed to the product, trusting the process and trusting the product. If it doesn't tell you the entry is there, do not enter. It's just as simple as that. When it shows up, you can get in, and then all you're doing is watching it candle by candle to make sure that the trade is still good. You're still going to stay in it. If it's a buy, you're going to stay in it until you get the signal to get out. So part of the mindset of trading is to remove emotion from your decision. Don't think you know which direction it's going. Don't think you know what's going to happen next. There are certain things that we'll go into later. There are what we call time of day things that happen at certain instruments tend to do the same thing at the same time every day. And that's something that we will add into our equation. But again, it's based on fact, not emotion. And we want to keep emotion out of it. If you get excited when you're trading, that's not the best position to be in, because this should be a way when you place the trade, even if it goes against you, you should be happy that you place the trade at the right time with the right indicators. We can never guarantee every trade is going to be a success, but we can guarantee if we always place our trades when the indicators line up to tell us to take those trades, our success is going to be higher than our failures. And that's what we're aiming for. because certainly as soon as you get up to that 70%, 80% success rate, your account is going to grow exponentially. Everybody's seen the compound calculators where you can, you can plug your numbers in, whatever your account size is, whether it's 100, 500, 1,000, 10,000, 50,000. You can plug those numbers in and you'll see how quickly that will compound out to you. The other thing that I would urge you to do when you're doing, when you're trading, is have your trading plan written out. Your trading plan is going to cover a lot of things. Again, I'll cover this in another stage, what should go into your trading plan. But you want to know when you're trading. You want to know what you're trading in terms of instruments. You want to know how you're trading. Are you scalping? Are you intraday? Are you swing? Are you position trader? What charts you're going to be watching. And I would urge you to be successful at a small number of instruments rather than jumping all over the board, because you get to know what instrument behaves in what manner. So a lot of people like to trade US 30, the Dow, and they get used to that. A lot of other people, I'm one of them, I prefer the NAS. I'm much more comfortable with the NAS. So I trade NAS 100. I also trade gold. I like gold. And I will also trade one or two pairs, Euro USD, USD JPY typically. But keep that number small. It's much better to become a master of a few than try and learn all these instruments, because you'll just end up getting confused. And again, that's part of your mindset strategy. Your trading plan should cover all these, what your exit points are, what you look for in an exit, what you look for in an entry, what the chart's got to look like. Impulse is so simple, because if the primary trend line is up, you are only looking for buys. Until you get experienced, then you can take some counter trends. I do take counter trends, but we're looking at risk reward, and the higher risk and the higher probability trades are with trend. You'll learn that from anybody, and everybody will tell you, go with trend. So again, your mindset is think about high probability. Don't risk your money. Counter trends are much more risky. Trading range and consolidation is much more risky. If it's in range and consolidation, you're waiting for that breakout, you're waiting for the retest, and then a continuation of that breakout. If those don't happen, or you get in when it breaks out instead of waiting for the retest, you can get caught out. So patience, which is part of the mindset, is essential to having a strong trading strategy. The technical analysis of the strategy we'll learn later. This is concentrating on mindset. So when you're in blue trend, you're looking for blues. You're looking for blue line above the red line. You're looking for blue candles up in the gray Bollinger range area. You're looking for the line on the, you're looking for this to be in blues or above. You're looking here for the breakout of the blue line here. You're not looking for this. This would be an exit when it breaks back through the red line. Your entry is when it breaks up through the blue line or bounces off the blue line, because blue equals buy and we're in buy mode. If it breaks down through the red, that means that could be a clear exit strategy. We'll go over those a bit later, but the mindset definitely has got to be learn that strategy, trust that strategy, keep your own emotions in check, and only trade what you see, not what you feel. Okay, I'm going to stop that there and open it up for questions. Let's see what's in the chat here. Damon says, when the signals are given to enter the trade, do you only have seconds to enter? No. So what happens is Oh, here, Jim's answered it for you. So on the 1 minute chart, which is what Jim and I trade, the 1 minute chart, Tony trades the 1 minute chart, we're scalpers. We're looking at the higher time frames to confirm our entries. So an impulse, that's the 5 minute chart. I will often use the 3 minute chart. And I want them both to agree with each other. But what happens is, as Jim says, is you can see the setup sometimes a minute, 2 minutes, sometimes several minutes. So on the RSI and the stochastic, the two charts at the bottom of the screen here, they will often give you a heads up of what's happening. And what they will do is they will give you a heads up. Like, for instance, over here, am I still on the share screen? Can you still see the impulse screen, Tony?
No, I don't see the share screen no more.
Okay, hold on. Let me get that back up again.
There we go.
Okay. So for instance, here, Damon, you can clearly see we've on these two charts here, we've jumped the blue line up here. So this is giving us a heads up that we might be going back on trend. But when we look right above it, if you look up the dotted line, you'll see that the arrow above it is a red arrow down. And what did I say earlier? We're looking for blue arrows when we're looking for buys, red arrows when we're looking for sells. So in this case, that is a precursor. This is the chart saying to you, heads up, take a look, we might be getting a trade set up here. Okay, so that's 1 minute on that. We've got 1, 2, 3, 4 red arrows right in this area here. So I look for at least 3 red arrows, and then if there's the next arrow is blue, that is our indicator that could be an entry. In this case, I actually wouldn't have taken that because it only went up into the white Bollinger Band. I don't like taking trades in the white area between the two Bollinger Bands. I would actually be on this candle here where the candle crossed the blue and the red, and it went up into the gray area of that. The actual safer entry is this one here, which it bounces. We got a clear crossover. The blue line's above the red. We're clear crossover here. I would be in here. I would be out probably. You could get out at this candle here. As you can see, it broke the red line here. You could get out here. You would definitely get out when this red line crossed out of the gray Bollinger Band range and went into the white. You'd be out. Okay. So, any other questions there? There we go. Jim says he does at least 5 go lives a week. Wow. Late entries are forbidden. That's exactly right. Every good educator will tell you late entries are forbidden. No, Tony does 5 go lives a week as well. Good, good, good. Okay, that's the end of my strategy for today. Does anybody else have any comments on that? Does this time work for everybody? Would Saturday morning work better for people rather than Sunday morning? Is Sunday evening around that 6:15 time a good time to do some live trading? I'm not going to be calling out actual trades. I'm going to be showing you where the indicators tell us is an actual trade, and then it'll be up to you to take those. Damon says Sunday is better. Is that for both of them, Damon, morning and evening? Okay. What about you, Jim, and your team? How does that work out for you guys?
Current times that you have set up work good for me.
Okay. Okay. Well, I'll keep them for now.
Yeah.
Okay. I'll keep them for now. I might do it a little bit earlier on a Sunday. To be honest with you, I did it at 10:15 because my football game was on at 8:30. My English soccer game. My team was on, so that's why I did it right at the end. We won, by the way. Yoo-hoo!
Yeah, it's good timing though. It works out actually pretty well because Sundays, it's busy, but not too early in the morning and not too late. So I think the hours are pretty good.
Okay, good.
So back at 6:15
Six
p.m.
6:15 today is the one that I'm going to go over the actual trading of the impulse.
Okay, perfect.
Okay, so if anyone wants to jump on, these calls that I'm going to be doing, by the way, in future, these are not business related. I won't be talking about becoming an IBO. I won't be talking about business opportunity. This is open. If you want to have other people on the call to show them the kind of things that we do, you can do that. But this focused on mindset and psychology in trading, which as you get further into trading, you'll realize is actually much more important than the strategy, but you do need both. So that's why we're going to focus on the strategy in the evening when the actual markets are open and we can analyze actual setups as they happen. But in the morning, hopefully Sunday morning, we grab a cup of coffee before the day starts. We can get on this. We can ask questions. We can go over the mindset part of it. I've got a lot more to share with you. I just wanted this to be the first intro session to everyone to see if you got value from it. I will post the recordings in the chat as well, so anyone can jump on. If you do have new people, don't forget, I'm only going to be talking about IM products in terms of the impulse strategy. So these people can't find this anywhere else other than inside the academy. So they want access to our tools. They need to be part of the academy.
Sounds great.
Anybody else? Anybody else got anything? 2 nuggets for you today, Damon. That's great. Yeah, I'll be taping all of them because they'll be different each time, Maria. And I know some people couldn't get on. And even on a Sunday, some people will be at church, some people will be at soccer practice, some people will be watching their football team. Woohoo! And of course, NFL season is starting. I think there's some friendly games today, Jim.
Yes, last week before the real season starts.
Yeah, so we're going to be mixing it up with a lot of sporting events and everything. So I will record it. I'll put it on my YouTube channel, but I will just post the link here, and everyone can access it at any time.
Thank you.
Does anyone want me to cover any other things in these these calls they need help with?
Well, I would like to say something. I just now restarting. Jim knows I've been here for a while. And I was working with the other strategies and stuff that we had before.
Okay.
So with this one, I just have seen some stuff. Is there a way or a link or something that I can go and check it out, like a trading view, how to work it out? And because I'm in trading view, but I don't know how to add like the US 30 and the NAS 100. I don't know how to do that. Is there a YouTube video or something that I can go and look at it and learn before I see your other videos?
Yeah, I'm only going to be focusing on impulse, Maria. So, if you're in the academy, you'll have access to it. Jim or I can send you videos on impulse, but it's not something that you can replicate in TradingView.
Okay. Yes,
So you do have to be in the academy. You do have to have a subscription to the academy to access impulse.
Yeah, I got that.
Yeah, okay. So that's what you're going to use. We're not going to be using TradingView at all during this trading. This is strictly product of the product training. You need to be in the academy and you need to have Impulse as one of your scanners that you subscribe to. Depending on what package you're on, if you're on the empowered package or if you're on the base package. If you're on the base package, you have to add whichever scanners you want to use. So you'd have to add Impulse to it. If you already have it, then fine, you just log into it. I'm just going to be using straight Impulse. What you see is what I see. What you use is what I use.
Perfect. Got it.
Anything you want to add to that, to Jim?
Maria, I do have a TradingView training in our group just to understand how to navigate and use all the different tools within TradingView, because Impulse is built on TradingView. And I do also use TradingView on the side to mark up higher time frames, because I don't want to clog up my Impulse chart with too many markups. But anyway, that link is in our pinned post on the getting started steps. It's a TradingView training video by another person on YouTube. But like John says, you know, we primarily use Impulse, and from there we can get to US 30 or any other trading pair we want. But the TradingView training can be helpful to help understand how to navigate the Impulse chart, or have a side chart of TradingView if you want.
Okay. All right. Thank you.
And I do that as well, Maria. You know, all of us have, usually we have two screens. So I have my laptop screen and I have another screen. And we will often use TradingView, like Jim says, for higher time frame analysis. If you have the paid TradingView, you can have, you know, two or more screens next to each other as well. Gives you a little bit more, a few more options when you go for the paid TradingView. But yeah, obviously the free one, you can do everything on the free one. It just shows you little ads all the time. But definitely don't go for the paid one yet until you're, you know, making money trading. But it is a way to have that, and we'll probably cover that at later stages. But in this stage, it's going to be a process of going through Impulse and making sure everyone's comfortable with Impulse before we start introducing the other things. So for instance, on Impulse, there's a series of buttons along the top. We're not going to be discussing those in the early stages, but we'll get to those as we proceed.
Okay.
So a lot of people are like you, Maria. They're either starting or they're restarting, and we want to make sure, or I want to make sure, that this process is something that's easily understandable for everyone. And like you see, it's, you know, hopefully, you know, when you can ask questions one-on-one, it's a lot easier to get a smarter answer from one of us.
Yeah. I just felt a little discouraged when everything changed to what we have now, because I was so comfortable with the other one. So that was like a bummer, and I'm stupid me, you know, I'm still paying for it and not using it.
Well, I would definitely, you know, always with these things is always talk to your direct upline. You know, Jim is my direct upline, by the way. So, you know, Jim and Darla were the people that introduced me through Sandy and Scott to this academy. So Jim is my upline.
And they are so helpful. I know that.
Absolutely. So I'm just doing this so that, you know, I feel that I'm at a level with my trading that I can share some of my insights with everybody. I'm going to do it so that I don't fall foul of the rules that IM Academy set in place. But, you know, Tony, for instance, who's on this call, he's seen my account. He can testify that I'm a successful trader, and he's in my downline, and he and I work very closely together. One thing to know about the educators as well, in Go Live, is they all audited by the company every 3 months. They all have to show their trading logs, their actual trading logs, not their demo account. And they have to show that they are successful traders, 6- and 7-figure traders, and they have to demonstrate that by sending in their trading logs to the academy, and they get audited. So, All right. If there's no other questions, you know, if everybody's in Jim and Darla's Telegram group, that's where I'm posting stuff. I think you have two now, Jim, don't you? You have the Impulse group and the IM team.
Right.
So I will post stuff in there. If you have any questions afterwards, you can post stuff in there. Reach out to me or Jim, or we'll get all your questions answered. And yeah, there we go, Damon. Yeah, good. That's where we're going to put all our announcements, all our team news, all our upcoming trainings. I think Jim and Darla, you're pause your travels for now, so you're a little bit more static. So
Yes, just bouncing around Southern California for now.
okay. So you know, hopefully Jim can jump on the calls with us when he's available and can add some insights like he's been doing today and helping out as well. So you know, our goal is to help you become successful traders. Yes, I'm going to be going along the funded trader route, which I don't think Jim's a big fan of. Are you, Jim?
Oh, I have nothing against it, and I actually have some insights there as well that I can help add to whatever you have.
There we go. Perfect. So we'll be going over that. But just in a nutshell, I just feel it's a way of having very limited exposure. And by that, I mean some of the prop firms that I use, one in particular, and I'll share that with you later. You can get a $25,000 account for $200. And if you put $200 in a live account, you know how limiting that can be when you're trying to make trades. And if you're looking at getting 1 to 3% daily rate on a $200 account, you know, you can't even afford a cup of coffee with those gains. So going through a funded trader account and a challenge is a way of leveraging, which is what we want to do in trading. We're always talking about leveraging. We want to leverage a small amount of money into potentially a large amount of money. And with these challenges, when you pass the challenges, which is gaining 10% in that account, you can then double that account. If you can still take profits, but you can go up to a higher account and they go up. Some prop firms will allow you to leverage that all the way up to a $2 million account. So there's lots of ways to leverage it. And we'll go over that, and I'll set out a plan for everybody to get to 5 figures in 5 months using Impulse and using a funded trader account. Yeah, usually 80-20. So like I said earlier, if you make 5,000 on that account, you'll be allowed to withdraw 4,000 and they will keep 1,000 because they're the investors that are putting the money up. And so they need a return on your money. But nonetheless, if you put in, let's say it's a $25,000 account, it costs you $200, you make 10%, you've now got a $25,000 account. If you build it up to $5,000 and you're taking out 4,000, well, your entry fee was only $200. So the leverage effect is tremendous. I don't mean to say that you're going to pass that. I don't mean to say it's easy. There are rules to follow. You can blow your account if you lose too much money on it. There are limits, and I'll go over all that with you as well. But it is a way of leveraging a small amount of money into a large amount of money. If you follow these other rules, which is your commitment, your discipline, your psychology, your mindset, then you can be successful, not only in live trading, but in funded trader trading as well. All right. Any other questions, or are we ready to go?
We're going to go over some gold later.
We'll go over whatever you want later. We'll be opening it up. I'll show you. We'll go over how Impulse works on gold and some of the other instruments as well, depending on who's on the call.
Okay.
All right.
Yep,
Thanks,
thank you
John.
very much.
All
Thank
right.
you
You're
for your
welcome,
time, guys.
guys. Thanks a
always
lot. We'll see you all. We'll see you all later tonight. Take care. Bye-bye.
Bye.